Welcome to Indianomics. The Reserve Bank Governor said recently that India's second quarter GDP will surprise on the upside. Now, just a little after he said that statement on October 31st, the government released the September tax data and the September core sector data. Let us see if they look like we are in for a positive surprise from the economy. First, the gross tax revenues. For July, August, September, the gross tax revenues have grown by a whopping 27.8% compared to just 3.3% in Q1. So that gave a very decent first half average of 16.3%. That is the growth in total tax revenues, gross tax revenues. Now let's come to direct taxes because that gives a better picture of economic growth. In terms of corporate taxes, if you see, whereas in Q1, corporate taxes fell by 13.9%, they grew by a whopping 45.8% July, August, September, giving a decent first half average of 20.2%. Remember, this is when the nominal GDP growth for the full year is expected to come only at 11%. Now let's look at income tax. They were good even in the first quarter. First quarter, it was a growth of 11%, but the second quarter, July, August, September, the Q2 that we are discussing, 51.2% growth, steaming growth in income tax, giving a first half average of 31%. So excellent upsides as far as these are concerned. Now let's come to core sector. Core sector data clearly indicates that while Q1 was a decent 6%, Q2, July, August, September, the quarter the governor was referring to, the growth is a great 9.68%. So to conclude, the tax data plus the core sector numbers show that the quarter is likely to surprise on the upside, show that the governor may be right in believing that the second quarter GDP may be higher than the Reserve Bank's own forecast of 6.5%. In fact, we at CNBC-TV18 did a snap poll which showed that 60% of the economists have upped their Q2 GDP forecasts just recently in the last 1 month, and most of them are averaging around 6.7 to 6.8%. The reason they said includes the good tax numbers, decent corporate results so far, and a surprising strength in the US economy, which grew by 4.9% in the July, August, September quarter. Well, if the Q2 GDP is higher, will the full year GDP also have to be revised higher? The Reserve Bank now stands at 6.5. What if the US and the global economy slow down sharply as the higher rates increased by the Fed hit home? For these and other questions, I have with me three well-known economists, Pranjul Bhandari of HSBC, Kaushik Das of Deutsche Bank, and Nikhil Gupta of Motilal Oswal Financial Services. Gentlemen, and Pranjul, thank you very much for joining me. Pranjul, to you first. What's your sense? Are you also going to or have already revised up your Q2 GDP?
Thanks, Latha. I completely agree with you that data in India looks extremely robust. The tax data that you discussed, it's not just that. Yesterday's PMI domestic orders were extremely high. And then if you look at things like real core imports are extremely high. So across the board, very good data. But, I want to take a step back before I comment on GDP, which is that, a lot of the GDP data has a few problems in it. For example, the first quarter GDP was 7.8%. I'm fairly certain that nobody believes that that's the actual growth on the ground because there was a lot of base effects, since the pandemic. First half of the year has a very low base. And if you remove these base effects, you remove some of the deflator issues, my sense is the first quarter GDP growth was closer to around 6.2% and not 7.8%. So yes, if you're going to go with what the CSO has come out with, I do agree first quarter will be it was 7.8%. Second quarter will be closer to 6.8%, which the RBI is now thinking. It put it out in its nowcaster model. It's higher than what even the RBI had thought earlier. But if you remove these base effects, then my sense is that in both the first quarter and the second quarter, growth is closer to about 6.2%, which in itself is a very strong number. But, it's cleaner. And it's very important to think about it like that.
No, I agree with you. I remember that the fall of the total GDP amount in the first quarter from the Q4, Q1 is always lower than Q4, but it's normally 2 to 4%. But in 2023, the difference was, I think, 7.5%. So clearly, the Q1 7.8 was a little overstated, or so it seemed. Nikhil, to you that question. You know, we did note some weakness in the Q1 GDP as well. But more importantly, look at the savings data, something that you have written about. That also is looking extremely worrisome. So do you think we can just be very confident about the tax numbers and revise higher? Where do you stand?
Thank you, Latha. So, Latha, first, so the question that you asked, Pranjul, yes, we have also revised up our numbers, and we believe that, I mean, we revised it up to 6.1% after Q1 data came out in August. So in September, we revised it to 6.1% for Q2, but it looks like it could really be 6.5 or 6.6% for Q2, which is where the RBI is. I think 6.5% is their projection, but it would be higher than where we expect. To answer your
so
second
what's your
question
so what's your Q2 now standing at?
So we revise officially only once a quarter. So the next revision will be in December after the data comes out. But it definitely looks like it could be closer to 6.5%, not 6.1%, which is our official forecast.
Okay, okay. But you're not worried that, data like savings data, I mean, there are some holes, and even that Q1, it was not a very convincing set of numbers. So any holes that we should worry about, red flags?
There are, Latha. So first of all, Q2 definitely will be better than our expectations. But as far we talk about the later half of Q3 and definitely the Q4 or the beginning of CY24, we are not so optimistic. We are not as optimistic as the RBI is or generally the market consensus is. We still believe that the US economy will see a slowdown going into CY24. It is highly unlikely. I am not still in the camp wherein I believe there will be soft landing or everything will remain as normal even 1 year down the line. So we believe our forecast for Q4 FY24, India's GDP growth is closer to 4.5% because we are expecting a US slowdown.
Okay.
That is one. Secondly, again, on savings, we all know that if out of your income you're consuming more, it will lead to higher GDP growth. But it also means that your income is not growing enough. Then you are eating into your savings and you're taking more borrowings, which is exactly what we need.
Nikhil, I'll come to the second half in just a minute. I wanted to get your thoughts on Q2 first. Kaushik, the question to you is, how much better will it be? Several economists in my Snap poll said that it will be 50 basis point higher. So the expectation is what, 7%? Are you also convinced it's going to be better than Reserve Bank 6.5%?
Yeah, Latha, we have tracked the GDP numbers for a long time, and the 50 basis point upside surprise is nothing. So, I mean, we have often seen GDP surprising to the upside and downside. So, if you get a 7% number, it will be not like a very big surprise.
Okay.
But yeah, I mean, what Governor Das mentioned, I think looking at all the hard numbers and whatever we've got so far, I think the risk is to surprise to the upside, and 6.8 to 7% is possible. Now, we know that there are a lot of idiosyncrasies when GDP data are announced, discrepancy, and other items which are confusing. But whichever way you slice and dice the data, the narrative that is building is that India's growth momentum has been quite resilient, even during COVID, and after that, the rebound. Whatever we have expected in each year, it has surprised to the upside. So to that extent, I will not be surprised if you get close to 7% number. But then the question is, can this momentum continue into Q3, Q4, as we head into the more difficult time period for rates remaining higher for longer, oil could be a concern. Then whether the private consumption that has held on to some extent, whether it reduces. Before election, do you see things slowing down on the private investment side, the last 2 quarters before election?
Yeah, exactly. So that is really the meat of the discussion now. How will the second half pan out? So let me start that with you, Kaushik. What's your sense? I mean, already we saw the IT companies saying that their headcount has been cut. Now, they have not sacked, but clearly they have not done replacement hiring. So, even for the first top 4 companies, the headcount fell by a good 22,000 people. So global slowdown is already hitting us in some sense. What are your estimates for second half and therefore full year?
So second half, we are at 6% for October, December, but can it be 5.5%? It can easily be, 5.5%. We know that the festival demand is looking good, but there are a lot of other headwinds which can offset that. Rural sector could be an issue with El Nino, risks. We had a patchy monsoon, so all those issues are there. So I think, October, December, we have 6%, which is similar to RBI's, but can it be 5.5%? It's possible. January, March of 24, I have a forecast of 5%, lower than RBI's, closer to 5.7 or higher.
Yeah.
If you remember that January, March this year, we got an upside surprise. We were all expecting 5.1 and it went to 6.1. So if you don't change anything, the base effect becomes negative. So January, March 24, you could actually end up getting a lower number. So all taken together, you could be somewhere between 6.2 to 6.5% GDP growth this year, which would still be very respectable because earlier people thought it could be below 6% when they were forecasting for FY24. So I think the second half will be obviously lower than the first half. And also remember that part of the growth is coming because of the real growth is because of the GDP deflator being so low in April to September. The GDP deflator on the WPI side will correct in the second half. So real GDP will not look as good as the first half that we got. So all taken together, we could still be at around 6.2 to 6.5 for this year.
Okay. Well, actually, I'm going to take a break on that note and then go to the other economists as well on the second half. Remember, when the RBI first forecast a 6.5% growth, they have stuck to their guns on that. There were several economists on the street with even 5.5%, and definitely a majority of them sub 6%. Now the average is moving well over 6% for the full year. But let's get that from our economists in a minute after this break.